Hi and welcome back to today's morning report on Monday the 8th of December with me, Richard Perry, market analyst at Handtech Markets. My final chart I'm going to look at today is gold. The gold chart has actually found a bit of support in the early European trading, and that again I think that's sort of maybe a function of this slight minor flight into safety that we've had on the general trading across the board today, with stronger yen, stronger gold, stronger silver. So it's a slight move into safe haven assets. You've got this downtrend on gold, however, that's I've just drawn in over the past. It's been in place over the past 4 months now, and the move on Friday just reaffirmed that downtrend. So we've got that in place, and it certainly looks now as though, also I mentioned in the morning report, that what we have got is a bearish divergence on this stochastics, where the stochastics are falling, however the price has been generally rising. So you've got this sort of bearish divergence now on the stochastics. The RSI is not really showing that, or nor is the MACD line. So I'm not going to get too bearish about that yet, but certainly looks like this rally is certainly losing a bit of upside momentum. And if you look on this hourly chart, you can see that a little bit, because last week we had this consolidation sideways as we were sort of moving towards that payrolls number, and you consolidated this initial run higher from that Swiss gold initiative fallout. And Friday's non-farm payrolls report suggested strong dollar going forward, and strong dollar is generally negative for gold, so that pulled the gold price lower. And what we've seen today is now a reaction from the support, which is coming at 1,186.10. But if you can see this on this chart, you've got I've pulled it back here so that you can see the sort of pivot level that we've got around 1200 now, and it provided support for a few days last week, but now we're back below that. You'd sort of be pointing towards the fact that we're now sort of in more of a bearish bias in this near-term outlook. We're not going ultra bearish yet, because we're still, if I go quickly onto the daily chart, we're still trading above this 1,180.70 level, which has been this massive floor on gold, which has subsequently become, I think, a bit of a pivot level. Acted as support. Obviously we had that spike lower, but I think that was to do with all this Swiss gold initiatives and the volatility. So not sort of taking massive amount of attention to that in terms of the bigger picture of this chart, but certainly I think that this 1,180.70 is a pivot level, and if we now lost that, obviously we're below 1200, so it's a slight bearish near-term bias, and I think if we then lost 1,180, I think that would suggest that this rebound has run out of legs, and the fact that we've got this downtrend intact, with the fact that we've got all the moving averages falling in bearish sequence, we're still in a situation where the momentum indicators are just could arguably be considered to just have unwound and oversold the oversold momentum. I think a lot of indicators are suggesting medium-term selling around these levels, and I think that would be confirmed if we lost 1,180. So this initially in the near term, I think you'd be looking out for this 1,200 level. Obviously, also what we've seen in the past few days, if I zoom in, is this sequence of lower highs coming in. That was 1,214. That was 1,200 and just under, sorry, and then the Friday's one, which on non-farm payrolls, was 1207.80. So you've got a sequence of lower highs. So I think if we now started to fall over around that 1200 mark again, I think that would be a bearish signal. So just watch out for that today. I think that 1200 level is important near term. Anyway, I wish you good luck in your trading on gold today, and I will speak to you later. Thank you.